Welcome to Coleman Report Live. I'm Bob Coleman, and we're talking Main Street and the small business lenders who help it grow. Lance, good to see you. We missed you yesterday. John Winning out of Chicago, CEO of Clark Street Capital, has interesting insights on secondary markets and bulk loan sales and trends. And, of course, Katie out of Washington. Katie, good to see you.
Yeah, good to see you, too.
All right, we have a ton of information, ton of questions. Let's get right to it. Poll question number one. Have you submitted first draw PPP loans to the new portal? What are we talking about there, Lance?
Well, if we have any CDFI lenders on the call, they very likely may have done so, but others have yet to be. And today the portal opens up for banks under $1 billion in assets. And then next week it opens up to everybody.
I wanted to ask this question. I was channeling my inner Lance and actually reading the IFRs, and we've had a couple questions on this. And Lance, we've had these questions. Hey, do I have to register with sam.gov before I make a PPP loan, and how often do I need to check it? So the first thing we're doing is, do you have to register to make that loan?
Well, you have to be. Yeah, you have to be registered, Bob, but most participant lenders have already done that. But yes, you have to be registered.
Oh, okay. And we also have to check it. That's it.
Yeah.
And just so you know, you do have 30 days to, from the date of the first disbursement, to complete the registration to provide the lender's unique entity identifiers. So, yep. Lance, what is your best practice? Do we check it every time we do a loan, or just for the first time that you have a borrower relationship?
The lending institution has to check it. Typically, it's when a new employee comes into government guaranteed lending and is going to work on SBA loans. And it does not have to be checked over and over and over and over again. Most of your existing SBA lenders that have been around for a while probably have this covered. I think new lenders may want to check and make sure that they're registered and get that identifier.
For PPP second draw loans, do lenders need to confirm the average monthly payroll cost for second draw loans?
You will have to. Oh, I'm sorry.
Come on.
Yeah,
Lance doesn't following scripts. But Lance, so the answer is correct. 86% of you are correct. But Lance, I thought we could rely on the borrower certification for loans less than 150. How do we reconcile the two guidance?
Well, for a determination of the loan amount, you're still going to have to look at payroll costs. Now, the under 150, I'm struggling a little bit to understand what we do and don't have to do. The under 150, my understanding is on the 25% reduction in revenue. We can rely on the borrower certification, and the borrower will present said documentation at the time of forgiveness. But it doesn't say that on loans over 150.
And here's the problem in the IFR. It says, what do lenders have to do in terms of loan underwriting? They have to do this, but it doesn't differentiate for loans over 50, 150, or under 150.
But the only way to make a determination of the proper loan amount is to confirm the payroll information. And if you'll look at it, it talks about a borrower who comes back to the same institution that did the first PPP loan. And it does talk about the fact that the existing documentation can, in fact, be used for a determination of the average monthly payroll.
Yeah, but I think you should get those things and nothing else, hold the borrower's hand and say, hey, look, I want to make sure that you're going to get forgiveness on this loan, and this is what you need to do to document.
Well, and the thing, Bob, and let's just fall back on SOP. SOP gives us minimums and maximums. It doesn't say that we have to be at the minimum or we have to be at the maximum. So in the case of collecting documentation, even though it's not 100% clear, you're going to need to know that if you don't already have it. And I think that's the implication, Bob. If Bank, of California did the first PPP loan, well, guess what? They already have the payroll documentation necessary
for the
second draw loan.
Finally, do lenders need to receive the 2019 tax returns from the borrower for these second draw loans?
Bob, you got some tricky ones in here today.
It's not tricky. Yeah, you don't need it. Can you get it? Can you ask for it, Lance?
Oh, you can ask for it, but it's not, the second draw loan you need to be able to determine the loan amount, which will require payroll information. And then you have to be able to determine the 25% reduction in revenue, which could, Bob, as we've talked about, come off of compiled statements, QuickBooks statements. It could come from checkbook registers.
We do not need the 2019 tax returns, just to clarify this. Hey, John, you wrote an interesting article. A couple things I want to talk to you about that in your BAN report. BAN stands for Bank Asset Network. Talk about fees and how important are these fees ending up to being for the lender, John?
Well, we all know lenders only make loans for their goodness of their heart, but there are. I think the fees.
That's true. Let's raise your hand if you agree with that statement. Yes, of course, John.
I think obviously we know the coupon for these loans is low. It's 1%. So the fees are an inducement to.
What does that mean? Back up. What does that mean? What does that mean?
Interest rate that you can charge the borrower. And I guess you can get a loan from the Fed at 35 basis points. So, you're making almost nothing on your interest spread. So the fees obviously motivate lenders to make these loans. It is interesting that only 25% of PPP borrowers have gotten their forgiveness. It does seem that lenders aren't really anxious to process the forgiveness and get these loans paid off, which is surprising to me because of the yield. With respect to the fees, I've had people approach me last year that had, $4,000, $5,000 PPP loan requests. And I always scratch my head. I'm like, well, nobody wants to do loans that size. So it is encouraging that there were small borrowers that got PPP loans. There was borrowers, I think there was 300 PPP loans under $100. So, the fact that they've created some additional incentives for loans under $50,000, where you can basically make $2,500 for, a $5,000 loan, is a nice inducement to give credit out to, really small independent contractors and sole proprietorships. The main difference with the fees is if it's below $50,000, you're going to get a flat fee of $2,500, providing it's above $5,000. And it's just, you make a $100 loan, you get $50.
But John, for loans of $1 million, I'm going to get a check from the government for $30,000. Lance, what do I have to do to justify that, if anything?
You make and disperse the loan, and you report it on your 1502 report.
Those now we're starting to talk about real dollars on that, and of course we are capped at $2 million. So what's the fee for PPP 2? It says 1% for loans at least $2 million. So $2 million loan, are we at 3%, which would be $60,000, or are we at 1%, which would be $20,000?
Your $2 million loan is going to have a 1% fee. Your $1,999,999 loan will actually make you more than your $2 million loan will.
Don't do that at home.
I'm happy to offer my consulting services on why you should do $2 million over $1,999. I'm sorry, why you should do $1,999 over that.
Let's go ahead and talk about. Let's see, Katie. Talk to us about what's going on with EIDL grants, and we know that we're reopening for small lenders. But give us sort of an EIDL grant overview. What's going on with that?
Yeah, so EIDL is reopening on January 17th, which is this coming Sunday. This is the grant portion of it. Before, you could still get the EIDL loan, which is just a regular loan with a 3.75 interest rate, 30 years maturity. The advanced grant is going to be just that, a grant, basically free money. They get to keep that. They don't even have to apply for forgiveness or anything like that. Now that grant is only $1,000 per employee, up to $10,000 maximum. that is available as of this weekend, and it will significantly help some of those small businesses because this program did run out of money for the advance grant kind of quickly. A lot of businesses want to be able to take advantage of that, and they will be able to take advantage of this now, as well as a PPP loan, because this will not be deducted on their forgiveness now. So that is important. And of course, anybody who had an EIDL advance grant that had it deducted off of forgiveness, that will be that money will be returned.
Question is, how long is it taking for SBA to process this, and what type of documentation do I need as a borrower? Anybody know?
This is more on the SBA side. I know SBA has a portal for it, but other than that, I don't know all the details about that. For the lender side, you just have to be aware if your borrower has an EIDL advance, an EIDL loan, because you are going to have to include that in your underwriting when you're underwriting other types of loans. But otherwise, this is all on the SBA side.
Lance, is SBA taking a collateral position on this, and do they need to subordinate it to the PPP?
Yeah, your EIDL loans will have a UCC filing on business assets, equipment. And if you're doing a new SBA loan, you're going to have to deal with that, if they do have an EIDL loan. Now, SBA will, in most cases, subordinate to a new SBA loan. If there is an EIDL loan that has a UCC filing, so that's something to keep in mind. It doesn't prohibit you from doing the loan, and SBA very actively will agree to subordinate for a new SBA loan to that borrower.
As the Inspector General came out with an interesting report yesterday, and go ahead 2 slides. There it is. And they're saying a lot of ineligible loans, but Katie, I don't have it in front of you. Here it is. They're saying there were 355 businesses that exceeded the 500 employee size standard, 123 which reported having over 5,000 employees. So we have affiliations involved in here. Katie, I'm unclear, and Lance, maybe you can weigh in on this as well. It does say, the Inspector General does say, hey, refer it back to the lender and possibly do a guarantee review, and is ineligible. These are probably the $10 million type loans. Lance, Katie, are the lenders on the hook?
I think potentially they would be if they have someone that was not eligible. The PPP program's just like the 7A program. An ineligible loan is a reason for a denial of guarantee. So lenders have to pay attention. One of the things in this slide that I want to point out, because I've gotten multiple emails about businesses that were started after February 15th or acquired after February 15th. Keep in mind, to be eligible for a PPP loan, the business had to have been in existence on February 15th of 2020. So a new business started in September of 2020 is not going to be eligible for a PPP loan.
The fraud rate here is like 2.5%. I mean, that seems high.
I thought it was less than that. I thought it was closer to 1%, John. Am I wrong on that?
You got 11.7 billion plus the 400 million, so 12 billion, out of 500 billion.
That's also what they're estimating. That doesn't necessarily mean.
Right. Yeah, so the other portion of the OIG report that's not summarized on this slide is that a lot of the information was not available to the OIG, and it's not available publicly. There's some information that really would give us better statistics about the type of fraud that exists in the program and how much. And either the SBA did not collect that information or they haven't published it yet. So that's creating a problem too for the OIG and for the public to try to determine how much fraud there really is in the program.
What about that list that what is it called? It's a list where you're on if you've defaulted on an SBA loan, or it was a do not something list.
Yeah, the do not pay list.
Yeah.
So they were finding that there were a lot of borrowers who were on that list who probably should not have received a PPP loan. That was in an OIG report that came out earlier this week. That is also a problem, and of course they're looking into those as well.
But they're checking now to make sure they're not on the.
That's why you do the sam.gov check.
Yeah.
That's where you get that list, John. Hey, John, I want to ask you real quick in your report. I've heard this term before, but I'm unclear of what it really means. Is your first loss is your best loss. You also make the comment that early sellers during the Great Recession fared better than lenders that held on to portfolios. Give me a good definition of your first loss is your best loss.
Well, I mean, I think it's a common credit axiom. The idea is, you take a credit, it gets to 60 days, and you encourage the borrower to refinance. Maybe you get out at par. If you sell the loan, maybe you're selling it at a slight discount, high 80s, low 90s, something like that. But clearly, if that loan migrates to 90 days, if it goes into litigation, the economics get worse and worse. I mean, I think the recovery rates on, recovered commercial real estate are probably in the 60s. So, clearly, if you took the loss, now the other flip side of that is, well, how do you know there's going to be a loss? So that's the counter argument to your first loss is your best losses. It does presume that there's going to be a loss. And
Lance, so how do we balance that statement, which certainly makes a lot of sense, and we've all heard that before, with the SBA attitude as, hey, we want to work with people. We don't want to put employers on the street. We want to work with them as much as possible. How do you reconcile those two issues?
Well, if you can utilize SBA servicing actions to get somebody back in a position to properly service the debt, that's what you should do. But I do have a lot of support for what John's saying because I've had the pleasure of working some problem SBA loan portfolios where you look at a deal and somebody could have, maybe they got an offer on a piece of real estate that was associated with an SBA loan. They declined the offer because they thought they could get more. And then, 6 months later, they get an offer that's 30% lower than that. The ideal way to, full repayment of loan is the ideal scenario. But when you have a problem SBA loan, getting out quickly, sometimes, most of the time is going to result in the best recovery. And John's right. You look at an SBA loan, I have a net recoverable value sheet that I like to use when working a liquidation project. And you can take a look at, what will you come out with if you walk through liquidation? And it takes into account, care and preservation expenses, litigation expenses, foreclosure. It gets expensive to liquidate.
Yeah, go ahead, John.
No, that's why we're seeing a lot of interest in, what I call sort of purgatory loans, not good enough to be refinanced, but the borrowers are still paying, and the bank is sort of stuck with that credit. And many of our clients are liquidating those loans at a slight discount. In some cases, if they've converted to CECL, they're actually making money. And, a good portion of those loans will become problems and they could take worse losses. So there's certainly an argument to do that.
Hey, I'm going to go through some of these questions real quick. And I love this question by Tracy, which means that sometimes we assume things too much. Tracy says, Lance, explain the difference between a first and second draw. What are you talking about?
Well, the first draw PPP loan is for someone that has not gotten a PPP loan in the first or second round. The second draw loan is for an individual who got an initial PPP loan, have used the money, and to qualify, they have to have experienced a 25% revenue loss when comparing a quarter in 19 to a quarter in 20 or annual 19 versus annual 20. So the first draw loan is for somebody that's never gotten one. The second draw loan is for someone that's already gotten and used their initial PPP loan.
My intuition is this PPP round 2 or PPP round 3 is like a sequel that still makes a lot of money. Maybe it's Jaws 2 and Jaws 1 was the first round. I would predict that you'll see roughly 60% of the volume for this gyration of PPP as we did last year. You're going to have a lot of the interest from the second draw borrowers, but a good portion of them won't qualify or may not want to do it. So it's not going to be quite as crazy as, May 2020 was.
Crystal's asking a question about guidance regarding payments. We're not going to touch that. We do expect guidance next week. Lance, Katie, when do you think that's going to hit? Forgiveness and
Yeah, forgiveness I think will come first, and then they've got a little while to really get out the details on the payments. I think we'll probably see that in the next coming weeks or so, but I expect forgiveness probably next week.
John asked a big question. I'm sorry, Lance, go ahead.
The CARES Act, or they may call it something different this time, payments. The first proposed payment would be for the month of February. So they've got time to get that figured out.
John asked the question. He's confused with the new SIP for farmers. What line do we use? Gross income or gross profit?
Gross income.
Do you know the number on that offhand? That's okay. Kathy, yes, the bank does register on SAMS as an entity. Real quick, what do we do on for Chris's question up on the board? Can we use the Schedule C? And the answer is yes, right?
Yes, yes, you can use 2019 Schedule C for it. Absolutely.
Okay. And next question, Joseph. Our purchase is, we get, Lance, you get a ton of these. We bought it in March. The bottom line is no.
Now, you have to remember the borrower is the new entity with a new federal ID number, which did not exist on February 15th, 2020, so it should not qualify.
Bruce, can you only apply for the EIDL grant and not the loan? The answer is yes. Carolyn says if a customer received an EIDL grant in 2020, can they get another one in 2021, Lance?
I'm not sure about that.
I believe, and you're going to have to look into it. I think what they can do is if they didn't accept the full $10,000, then they can get more. But if they already had that $10,000, I don't believe they can get any more than that.
How long will it take? We don't know how long it's going to take to get the fees. Great question by Anita. Does the PPP loan count towards the cap, the $5 million cap of the $3.7 million guarantee amount?
I still am not completely certain about that, Bob. And I've never seen anything in an IFR or a bill that indicates whether the PPP counts toward their maximum loan availability at SBA. So it's an excellent question. And I would love for somebody on this call or multiple people to send it to your local district office and see if you can get a response. I'm not sure on that question.
That's a great question. Lance, what are you talking about next Tuesday?
We're going to talk about preparing for your 2021 SBA review, things your bank needs to, or your institution needs to think about shoring up now and getting in shape in preparation for your 2021 SBA review.
We're also going to have a repeat of the webinar we did last week. It's not a forgiveness. That'll be a separate entity. That's a typo in our report. Anybody who participated in the webinar is automatically invited to this one. And if you have an unlimited link, you can invite anybody in your bank. So we'll be redoing that. John, thank you very much for joining us. I always appreciate your insights.
Thanks, Bob.
Lance, Katie, everyone have a nice weekend. And thank you for joining us for Coleman Report Live and for supporting America's Main Street, one entrepreneur at a time.
Have a great weekend.
Have a good weekend.